They appear out of nowhere, young, successful, and impossibly wealthy. Their Instagram profiles showcasing exotic cars, designer clothes. Their message is simple and seductive. I made millions trading Forex, and you can too. Welcome to the world of Forex trading millionaires, where the cars are real, the watches are real, and the only real currency exchanging hands is from the markets to their pockets. Buckle up, because we are about to expose the secret strategy that they use.
All those traders, they have this one thing in common, and that is they are all breakout traders, and they are making millions. In fact, I have generated over $4,000 just last week using this exact same strategy. And so in this video, we are going to break down exactly what's happening here. So there are a couple of characteristics that they all share. Number one is that they trade at very specific times of the day. Number two is that these traders are using only candles, purely candles. Occasionally, they might add in some moving averages or use the VWAP. However, they mainly use candles. And number three, they use one strategy only, and they use it to kill the market consistently. And if you want to learn exactly how you can get results like this, then I suggest you watch this video to the end. Alright, so let's jump into the video. We will start with time. Now, the markets have 3 sessions, and these 3 sessions are Asia, London, and New York. So these traders either trade the London, the New York, or the Asian session, or all the sessions, and they trade at very specific times of the day, and that is the first 2 hours or 3 hours of the session. For Asia, you'll find them trading at 9 p.m. to 11 p.m. This is New York time. For London, you'll find them trading at 3 a.m. to 5 a.m. New York time. And for New York, which is my best, is from 9:30 a.m. This is just 1.5 hours to 11 a.m. Now, if you are not trading at these specific times of the day, you are doing yourself a disservice, because this is when we have the biggest moves in the market. So if you miss those big moves, then you are eating scraps. So that is number one, timing. Now, when they come to the market, what exactly are they doing? Now, you need to understand exactly what happens when the market opens. When the market opens, we have what we call increased volume. Now, increased volume just means that we have a lot of activities happening in the market. So, new traders are coming in. That is number one. Then number two, you need to know that interpreting volume. Now, volume shows up on the chart as very big, impulsive candles. While a lot of traders run away from big candles, these traders, I included, we salivate when we see big candles, because in reality, we stay in the market between 1 minute to around 10 minutes maximum. So that is our best. We want to see the biggest volumes. And so you only need to know volume, and you only need to understand that volume brings in big candles in the market. So now that we have big candles in the market, how do we predict where the market is going? This is now where the candles come into play. And pay close attention, because this is where everything happens. Now, a candle is this. It's either blue or red. So first things first, you need to know that if you see red candles, it means we are going down. If we see blue candles, it means we are going up. It's as simple as that. So let's use the example of blue candles. So if you see one blue candle like that, then you see another blue candle like that, and you know that we have volume in the market because it's the market open. So where do you think the next candle is likely to continue going? The next candle is likely to continue in that direction like that. And when we have volume, you'll have very, very big, quick moves. 2 candles, you have already hit your target. So the traders that we are talking about, I included, we only trade these moves. Very quick, very fast. So how exactly do you catch these moves? It's simple. Step one is you need to divide your chart into timing windows. So if you look at, for example, this was a trade we took on Friday. This was a massive move, pump and dump setup. We will come to this later. For now, let me show you how you break down your chart. So you break down your charts according to when you come to trade. For example, I come to trade between 9:30 and 11 a.m. So I know the boundaries is 9:30 to 11. Anywhere outside of 11, I don't trade. Anywhere before 9:30, I don't trade. Now, we come to the market at that specific time. What are we looking for? We are looking at the last candle on the 3-minute time frame. By the way, I am using the 3 minutes. Some will use the 5, some will use the 15. However, I use the 3-minute time frame. And the last candle before the timing window begins sets the high and the low, like that. Now, if it's blue, where do you think the market wants to go? It wants to go up. If it's red, the market wants to go down. It's as simple as that. So all we need to do is wait for the market to open. And since we know the next candle is the market open, if it closes above like that, then we have our confirmation that price wants to continue in this direction. So we buy and we hold until we see red candles. That's it. So say for example, you buy, the next candle continues in that direction and it does not hit your target. Say your target is up here. So you're waiting for the next candle to continue in that direction. Then what happens? The next candle changes color like that. So at this point, you need to tell yourself that now this move might potentially be over and you need to be okay with that. And you also need to be very dynamic in terms of when you see this red candle, all you need to do is just draw the high like that and draw the low. And then you wait for the next candle. If the next candle is a confirmation that we are going down like that, then you exit this buy position and you take a sell position that now you can continue riding the move, which is the reversal. So I teach this exact strategy in the breakout trading masterclass. The course is in the description below this video. Check it out. Now, let's go and look at what happened on Friday. Let me show you how we were able to catch this entire move on Friday. So, step one, when you come to the market, divide your chart. So, we divide our chart to begin at 9:30 a.m. New York time. And we want to finish at 11. Where is 11? 11 is here. So, our job is to trade inside this timing window. So, what do? When we come to the screen at 9:30, we are interested in the candle before the market open, which is this candle now. It sets the low, it sets the high. And then now, when the market opens, unfortunately, it pins the low, but we don't have a clear breakout. So remember, we are breakout traders. However, this next candle here, so we are still going up. We know we are going up. This next candle was a breakout to the upside. So we took our first position going long here. Stop loss is below the breakout candle and we were targeting a 1:3. We are always targeting a 1:3. Minimum 1:2. Then what happened? Price continued going higher for the next 2 candles before printing a red candle. So this red candle gave us our high and our low, which is our area of support and resistance. And now we were waiting for price to break out and close below in order for us to confirm that price wants to continue down. So this is where we took our short position And in fact, I called this one in the signal group. I called this move in the US 100 signal group. These all are links in the description if you want to join. And our target, we were thinking that if we were to get a reversal, this would have been a pump and dump setup that would go back to the low of the day. And so we were targeting a 1:3. I think I got out here. And you can see price just continued going down to the low of the day.